Hello and welcome to Livewire's Buy, Hold, Sell. My name is Vishal Texanani and today we are recapping the year that was 2025. What did the fundies think were the big themes, the duds, and the stocks that got away? And importantly, how are we set up for 2026 and what are some stocks in good shape for next year? To discuss this with me, I'm joined by Hugh from Atlas Funds Management and Jun Bei from TenCap. Welcome to both of you.
Hi.
Thank you for having us.
All right, Jun Bei, I'll kick off with you. In one word, how would you describe 2025?
Look, I just think 2025 was crazy, but it was amazing rotation. I guess that's the key word, the rotation we're talking about. 2025 was the year where, you saw a lot of names, the performance going to the small caps that's done well, and then you've seen the value names that's done well, you've seen the resources name that's done well, that's after many years of waiting for it to take place. And then you've seen some of the, interesting space, which is more thematic, the AI and others, newer sectors that's taking hold.
Okay. Crazy rotations, great point. Banks, commodities, gold, you name it. Everything except healthcare, seemingly. How would you describe the year in one word?
Overreaction. I mean, a great example of that was in June where Trump announced he was going to increase steel tariffs from Australian steel. As a former steel analyst, I was a bit scratching my head. I can't imagine we sold any steel to the US. It turned out we sold $250 million worth of steel. So the equivalent amount that Nicole Kidman generates a year from her movies and TV shows and Keith Urban together with a lot less things. So there was a lot, and the market fell on that, and without thinking that there was not much there. It was but a bit of cold rolled steel sent from BlueScope from Kembla to the Pacific coast, but this sort of dominated conversations, dominated the markets. The politicians and the press were wringing their hands, but ultimately it was nothing.
Okay. And what surprised you about markets this year?
The ability to look through things. So we had an enormous panic through the Trump tariffs. That was supposed to dominate discussions. So, for example, really started to come out early April. The market was down 7.5%, but finished up the month of April about 4.5%. With a lot of the big Australian companies weren't that really impacted by it, but it was supposed to be looking through a lot of those issues. It moved very fast. Went from sort of doom and gloom to big recoveries. Ultimately, a lot of the banks and the miners weren't impacted, and they're able to look through that. And that provided, probably similar to June's comment about crazy, it gave you some opportunities.
It was quite the V-shaped year indeed in stocks, Jun Bei, but what surprised you the most?
Look, what was surprised most, actually, opposite to what Hugh's saying, the ability to look through things. I think on the stock level, a company's level, it's actually inability to look through things, particularly in our some of the blue chip Australian companies. You take, for example, the CSLs, the James Hardie, just you name it. There's plenty of names. Stock market at this stage, well, at least in 2025, could not look past beyond the next earnings season. I think it's the market has become very short-sighted and very impatient. Look, I have very short attention span, and the market does too, which is great. That works perfect for the share market. But they all focusing on the next earnings. So if the earning doesn't look good, it's gone. I really surprised me how short-term the market is with the companies and how impatient they are with the companies, because we know the company set their strategy for 3 to 5 years, but share market these days focus on 3 months.
Okay. Now, Jun Bei, they say you shouldn't be emotional about investing, but for this question, we're gonna be a bit romantic. What's the one company that got away from you this year?
Oh, look, there's plenty of company that got away from me. There's this company. Well, actually, we do have some, but I wish I didn't keep trimming it, keep taking profits, because we do limit to our risk to a certain perspective. It's this one little gold company called Catalyst. We was outside. It's not even in the index. It wasn't on anybody's radar. The first time we brought it up early this year, we spoke to our client. They said, never heard of it. We know every gold company. We never heard of this one. It's not in the index yet. But the company raised equity early in the year to expand their production and the like. And I thought the company actually has shown really good track record and the like. And then we took position, and then they so far this year they've gone up like 150%, like incredible. But we just keep trimming it back. I wish I held all the whole position, but that's one company I think will continue to track higher.
That's the way it goes sometimes in investing. Hugh, what about you, mate?
Similar to June, but up the bigger end. So we did a lot of work on Northern Star. There were a couple of production issues late last year, and that just scared us off. I wish I'd bitten the bullet. Thought there could be some more production issues, often with gold miners, probably not Catalyst, but some of the miners, they have production issues. And I thought we got a bit cute with that, and it just kept on running away from us. They didn't have any production issues in sort of 2025, and that was a key mistake we made. We just didn't look through those issues late last year, and probably if we'd owned this, the performance would be a bit better.
Well, hopefully both of you learn how to be better gold diggers next year. Mate, what is the one thing investors need to get right in 2026?
I mean, the key thing with investors getting right is the banks versus miners rotation. Every year, as it's a large cap Aussie fund manager, that's the key thing, getting that right or wrong. And if you've got that absolute wrong, and you see some of other rival fund managers go either new to banks or new to resources, and if you get that pick wrong, you may for a pretty tough year. Currently, the banks were shooting the lights out earlier on this year, up until CBA's demise with a bubble. At one stage, CBA was up sort of 28%. Then famously, an American investor came in, was it early June? Fisher Investments bought a lot of CBA at $1 billion, saying that valuations don't matter. The stock price went to 180 and now it's back to 150, so the stock price does matter. So getting that right.
Jun Bei, same question to you. What do investors need to get right in 2026?
Oh, look, for us, we just want to buy companies that share will go up. And then because we're long-short manager, so we can short the companies, the share price go down. So for us, it's really about earnings. I think 2026 will be more or less like 2025. Underlying economic activity is okay. Share market looks okay. Maybe there's no rate cut here in Australia, but US, there's a few more. So fundamentally supportive. You look at the earnings growth between 8 to 10%. So it look all pretty good, right, for the share market. So then it really come down to the earnings. Do you get the earnings right rather than the sector? Look at the performance, the disparity in performance, like the Coles versus Woolworth this year. Next year, if you don't get the earnings right, doesn't matter what sector it is, you're going to miss it. Remember, investors have very short attention span and very short term. So it's about the next earnings. So we stay very connected to all the companies about how their trading conditions are, because economic activity is a little bit patchy, and that's where we drive the return.
Okay, so building on that, Jun Bei, what is the one hot stock shaping up for a good 2026?
I'm not sure if it's a hot stock. It's, for 2026, I think some of the dogs of 25 will do quite well, just simply because they got sold off for some of the cyclical issues and others. Now this one, I'm going to name it, it is a dog, right? So it is still a dog, but I do think 2026 will shape out to be easier year for them, so which is James Hardie. James Hardie has, anything that can go wrong has gone wrong, and management team is also have issues, and not talking to Aussie investors certainly doesn't help. But more recently, they really seem to have turned the corner a little bit. Look, partly because expectations so low, you can't get any worse. And then the US, people are still expecting one more rate cut this month, 50 basis point, another 50 basis point next year. That will surely set the whole sector on fire, the US housing activity. Now, it's been very, very low. Things are pretty tough. So we all know things are pretty tough. But based on what it is, company already started upgrading, even on the low activity. I do think 2026 will be a bit easier for them. It's not expensive for the growth that potentially they can deliver.
Okay, as always, a very brave call. Hugh, what about you?
Similarly, going to go over the dog that's very much in the toilet, CSL. Similar to James Hardie, a lot of things have gone wrong. A bit range of self-inflicted wounds. Global healthcare stocks are under a fair bit of pressure with the Trump tariffs. And then CSL surprised the market with their announcement that they're going to spin off Seqirus. They're going to cut 15% of the workforce, which is interpreted that they let costs get out of control. And then we see vaccine hesitancy in the US. Ultimately, what they sell, they're not lifestyle drugs. It's not Viagra, Rogaine, or Ozempic. The bulk of the drugs they sell are drugs you need to live. There's ample opportunities to see them sort of recover in 2026. They sell non-discretionary items, and they're trading on 16 times, 4 or 5 P points discount to the market, probably about 7% growth. I think they're setting themselves up for a much better 2026. But as with James Hardie, the expectations are very low for this company.
Okay, well, there you have it. Some good lessons from 2025 that are shaping some great ideas for 2026. Hugh, Jun Bei, thank you so much for your time.
Thank you for having us.
I hope you enjoyed this episode. Please don't forget to like this video and subscribe to our channel. My name is Vishal Teksnani. Have a good day and good luck in 2026.